Welcome to the Not Unreasonable Podcast. I'm your host, David Wright, an actuary and reinsurance broker. This is a show of interviews with people who have something to teach us about managing our businesses and ourselves. There's a lot to learn out there, folks, so let's get to work. This show is brought to you by Beach, where I work and have worked my entire career. We are a global reinsurance intermediary, and we pride ourselves on creative thinking, deep analysis, and client service. Those three qualities are actually intimately related because you can't spend the energy digging deep into a problem unless you really care about the client. We find that when you really do understand the problem, the solution becomes obvious, even if it seems a little bit unorthodox to the outside world at first. The nature of insurance is to take solutions we know and trust and try to force them onto the problems of the day. We just don't settle for that. You can see further at beachgp.com. If you're an actuary, you, like me, probably dread the professionalism continuing education requirement. I think that the best time to satisfy this is in podcast time, while on your commute, while walking your dog, while mowing your lawn, while doing the dishes. Head over to notunprofessional.com where, for the price of a CAS webinar, you can get content dedicated to continuing education for actuaries, especially Professionalism CE. That's notunprofessional.com. Thanks for listening, and thanks for supporting the Not Unreasonable Podcast. My guest today is Todd Hart. Todd has had the following jobs: political campaigner, investment banker, hedge fund trader, hedge fund portfolio manager, private equity investor, reinsurance company CEO, insurance company CEO, and stay-at-home dad. Todd is one of the people in the world I admire most, and I'm honored to have the opportunity to sit down with him today. Todd, welcome to the show.
Thank you very much, Dave. It's an introduction that will make my mother blush. So,
well, that's a big list of jobs we had there, wasn't it? And a real diversity, in particular industries which are maybe some might say closely related, but maybe not once you get into it. And there was a transition in the early 2000s, right before we met, actually, where you started working on insurance-related transactions. So I'm wondering if you remember the early days of your reinsurance hat, I suppose. And can you think of something that Todd in 2002, let's say, or an average hedge fund manager, maybe even today, wouldn't appreciate about the reinsurance world?
Yeah, I guess there's a lot to think back on from those days. First thing I would think of is it's harder than you think it is. I think I approached the market transitioning from traditional capital markets to reinsurance markets as being a big one. But you have to make a lot of mistakes along the way, which there's only one way to get knowledge and experience, and that's to make mistakes. Yeah. And hopefully, they're oh my goshes, not oh my gods along the way. But I thought, and I think a lot of capital markets people approach the world in trying to simplify things down into kind of a digital format, if you will. And reinsurance is messy. And in fact, what I describe it a lot often is the place where the analog world meets the digital world. Right, you're dealing with the messiness of catastrophic events, or and don't have a ton of experience in casualty, but a lot of these things which are just not as easily defined in a principle that you might do for other kind of standard securities. Mm-hmm. And so as a consequence, it's just a lot harder. Yeah. And I think I did not anticipate how much things like relationships and continuous business over time is one of the ways you manage that complexity. And you still see continuing encroachment or growth in the capital markets into the traditional reinsurance markets, and I think that should continue because it makes a whole lot of economic sense. Yep. But there is going to be a disconnect between cultures, and I spent a lot of time translating what happens in the reinsurance world to the capital markets teams. And rate online is no different than yield or interest rate or something. And so that would be probably the primary thing.
What is the culture? What is the culture of the financial markets outside of reinsurance? Maybe you can give some context. And which sort of markets did you work in before you touched reinsurance?
I spent a lot of time in the equity markets, and started my career actually working in the bond market and swaps business right after business school. Couldn't stand the regular hours and weekends off, so that's when I started doing work in the corporate finance and M&A world before I left that to go into investing. And I think, probably the simplest way to describe it is and it's actually had this conversation with somebody in the reinsurance world, and it was very, very clear in that, we can have a relationship which is no tiers.
Right.
We sit across the table from each other. One of us is going to win, the other is going to lose. And if we understand that's the relationship, that's perfectly fair way to trade, so long as we're clear about that.
Yep.
And then there's another kind of relationship you can have with someone from a transaction standpoint, whereas we're going to be doing this over time.
Yep. And
we anticipate that sometimes I'm going to win and sometimes I'm going to lose, and vice versa. But over time, it's going to work out for both of us, right? And that's more of a reinsurance concept. And that does not really exist in the capital markets in a fashion, or if it does, it's very narrow.
You'll never meet again.
Well, the expectation is you won't.
Right.
Right? And, so there's much more of that trading mentality,
Yeah.
much, much more dominant. I'm not saying it's exclusively the case, but it's certainly more dominant.
Mm-hmm.
And I think, both are fine. It's just a question of which principle it is you're operating under and making sure you're clear about it.
Does it change the kind of person that exists in the industry? So, like your average, I don't know, your average employee of, say, an investment bank or a hedge fund, or do they behave differently in the office based on this difference of behavior outside of the office? Are they different people?
It's hard. That's a hard question. I don't really know how to answer that. I think you can have common behaviors of enterprise and creativity and all the elements of it. Are people harder, less relationship oriented? It's hard to say.
Yeah.
I don't think these are not binary outcomes. It's not yes or no. It's just
Right.
degrees of gray.
Yeah.
At least the way I look at it. It's a tough question. I don't know
Yeah.
if I can really.
So how about kind of going back to the hedge fund? You were trading public equities at a hedge fund. Well, how was that? What's interesting to me about you were there probably just before the real blast off, or maybe that was around like kind of late '90s. Maybe it was really kicking off then.
I started actually doing investing work actually almost at the peak of the market and watched it go down for 2 years.
Okay, ouch.
Yeah, which was could be right. Could have been a good thing. We did fine, but that's like a lot of worlds. We talked about this before. Talked about in the past, I should say, where the concept of the Michael Jordan effect, and this is something that you might remember many, many years ago that Michael Jordan and Scottie Pippen were on the Bulls. And I'm not a big basketball fan, but this was so so abundantly clear to me. If you weren't the first or second guy on the team, the compensation that you got involved in was good, but not great. And the market, I think, when you go through big turbulence, certainly in the capital markets, it was pretty abundant to me that to get some kind of performance, you need to be in the top decile or quartile in order to attract capital, and that's what we're trying to grow into. And our performance was good, but not good enough, and that's why we decided not to continue that. And I rolled on just to do some other things.
How did you get that job? Where did that come from?
It's actually an old high school friend.
Wow.
Who probably one of the smartest guys I know, asked me and one other guy to relocate from New York to Dallas.
Yeah, tell us the story of your geographical. You were from Dallas originally, and you were in New York at that time.
That's right. I was living in New York. My wife and I had our 2 kids. We were prepared to kind of slog it out, even though...
Right, living in Manhattan.
Live in Manhattan,
Yes.
Upper West Side. And, my son's, among his first words were taxi, which has its own sense of warpness. But, we happened to be in Dallas at a friend's wedding. And my other buddy hatched this idea of starting a fund in Dallas, doing something that was quite interesting, and he asked me to engage him in that little adventure. And that list of stuff that you wrote about earlier, or talked about earlier, is a lot of it's just kind of fall on your nose.
Yeah.
Right. The opportunity made sense, and you jumped on it. Some of them worked really well. Some of them did okay, and decided not to continue them. And that's the way that goes.
Right. So from there, the public equities kind of strategy, mixed bag, not enough to be Michael Jordan.
Right.
And then so you moved on to the next hedge fund, I guess.
Yeah, the partners of HBK sponsored this other fund.
I see.
And so I was already already kind of known by them.
In the ecosystem there.
Exactly right. And so I was sponsored by, at that point in time, by a partner of HBK, Will Rose, to build a business around insurance for HBK.
Okay.
And that started out with, very simply, a telephone and a Bloomberg machine, and said, go build it.
Why did he pick you?
You have to ask him.
Yeah. What do you think? Would you have picked you if you were him?
I've always been comfortable dealing with ambiguity and trying to structure ambiguity.
Right.
And I think that's a large portion of it, because you take on a big project like that with very little boundary. The question is, how are you going to make progress, right? Because you could boil the ocean and trying to go into the reinsurance business, but that's never, it takes a lot of focus in trying to reduce it down to the basics.
Yeah.
And it's something that I've certainly tried to do in most places I've been, and certainly in my last several jobs try to do that. But I think he had a lot of confidence in me to do that, which I'm really grateful for.
I mean, it's interesting, isn't it? Because it takes a remarkable, sense of what you really want to do to take somebody out of an entity or a strategy that wasn't a smashing success, and say, I'm going to grab a guy from that strategy and put them in something which I know even less about, and hope it works out. I mean, you must have had a good relationship with him.
Yes,
at the time.
Did and do, and he's one of the best guys I've ever worked with.
Yeah.
And he's very good at kind of setting direction and then kind of getting out of your way, right? Which is the way I like to operate. I'm not particularly good with micromanagement.
Yeah.
And we have a lot of contact with each other. We've known each other for quite a while, so a high degree of trust. And I think he knew that I was going to play straight and figure out at the end of the day. Well, the whole thing about the fund I was with that we closed it down. I mean, look, there's this whole concept I know. It's certainly very prevalent for anybody, and my wife picked up on it, who's from London, originally in Texas. This concept in Texas that it's better to have tried and failed than not to have tried, right? And that's okay as long as you played right and you played correctly and you got up afterwards and dust yourself off and get back on. But I think that's a lot of what came out of that experience when I was at Cimarron, which was the fund I was talking about earlier.
Yeah.
And
what did you learn? What did you learn from that failure? Anything specific come to mind?
Well, the first thing I learned is that the difficulty in having an edge in financial services is crushingly difficult.
Yep.
And smart guys working really hard and finding some edge and maintaining it. It was really very difficult and much, much harder than I anticipated. It's the first time I'd really been a trader, per se, or an investor to that extent. And I think that colored my thinking as to why I wanted to get into the reinsurance business from a capital market side, which is, that's no smaller a market, but at least there the information is more opaque. And information opacity, creates opportunities. Whereas if you're trying to trade information in a trade on stocks and use information to do that, whether it's stocks or bonds, that information is pretty efficiently distributed. There's always stuff you don't know, right? There's things that are inside. You can't trade on that because your stripes go horizontally, not vertically, if you do that. But it's really finding that edge, which is really quite difficult. And at least in in the reinsurance world, my sense is that edge probably was greater historically than it is now. Yep. A lot of that's getting competed away, whether it's because of the introduction of the capital markets, which is a lot of capital, and that will certainly drive margins down, but also the competitive edge and knowledge of what risk is inherent in a contract is been substantially standardized, through cat models. And so that creates a language under which you can trade on. And that will reduce margins as well. So you have to search for the next thing.
You do, yeah. And that's a competitive market, right?
Yeah, that's a competitive market.
Staying on public equities just for a second, how much insider trading do you think there was out there? That seems to me one way that on paper, or at least in my conception, it's a pretty common edge people might just reach for in hedge fund trading or any kind of trading.
Probably more than I believed.
Yeah.
I certainly did not see that in the environments I was in directly, whether it was in either of the two funds I was operating with. But because, I came from Wall Street before. I was at J.P. Morgan, and that whole insider trading thing was I was kind of one of the third rails. I mean, very clearly reputational issues notwithstanding, you just didn't do it, right, for obvious reasons, and spent a lot of time understanding that. So it was, it's just kind of the condition where you come from. So do people ignore that and try to trade on it? Absolutely, I'm sure they do. Yeah. There are always people that try to break the rules.
Yeah, and there's this puzzle, right, of hedge fund performance where they were quite clearly outperforming in, call it pre-crisis, and it's not as clear since then about the outperformance? I mean, I guess it depends on how you measure it. Any reflections on that? What do you think is going on there?
I think a lot of competitive edge. The markets they were, the competitive edge has been diminished.
Yeah.
Right. I think you have a lot of money chasing very similar opportunity set, and it's no genius if there's a lot of capital supply going after a limited opportunity that those margins are going to go down.
Yeah.
I don't. Whether there hasn't been a lot of merger business. That was a big strategy for a long time pre-crisis. Certainly even in the 90s. The convertible bond business, which was, that was a big business for folks in the late 90s and early 2000s. I think a lot of those margins are gone. Credit spreads are tight. It's just a lot of reasons why capital's trying to find something interesting and good to do, but it's all of them have the same models now.
Yeah.
Right. So it's like almost knowledge of what a good price for wind risk is a lot more transparent than it was historically. The same thing in that markets as well. So I think that's probably the biggest driver. But I haven't been in that business for about 10 years plus, so it's really hard to say for sure.
And do you think that the price signal is less reliable maybe in the catastrophe business? I think about this sometimes, where look at the excess loss pricing or whatever there is out there on catastrophe risk, and it goes up and down. It's sort of steadily declining. And I'm wondering what you think that might reflect. Is that a reevaluation of the risk? Is that something else? Any thoughts on that?
I think the price signal is actually quite robust in that marketplace.
Yep.
And because I think about the trading environments, which I've operated through. I really got active in 2003, 4, and then traded through 5 and 6, which that was a very different marketplace, right?
Yeah,
to be a seller of risk at that point. And so you think about post Katrina KRW 2005, it wasn't just that, right, that caused issues. We had the change in the AM Best capital models, as well as the RMS changed their modeling. So you had multiple factors that caused a rapid need and increase in demand for capital, and the supply was very skittish. And so as a consequence, rate online for even simple trades like ILWs, doubled, not more. And there's no necessary competitive edge in that, right? Per se, because it's
like right place, the right time.
Right place, right time, right? And which is a competitive edge, right? Yes. A form of it, but it's not like you had informational insight that that others couldn't have. But I think what's happening is, as it was pretty obvious to me that certainly pension funds and the more institutional capital should be in this marketplace directly, whether it's through cat bonds or something similar, because if you add an uncorrelated asset which you're getting a margin on, you should improve your returns, right? I'm no genius about that stuff, but it seems that's the way the math's supposed to work. So what's happened, I think, over that time frame from 2005 through now is a combination of credit spreads generally spreads for traditional credit have gone down. People have in search for yield has also gone, but the ability to get yield has gone down. So they've chased newer markets and so with so much capital going into that business, into the catastrophe business, it's not terribly surprising that returns have gone down. Yeah. Right? It's just a lot of supply, and so that's why I think it does reflect the risk factors. I think probably reinsurers were getting paid over the odds, well over the odds for quite a while, which makes it attractive. But now other people figured that out and are able to supply capital to that marketplace.
And there's an alternative. There's some sort of reading of the facts, which so I think is underappreciated. So let me give it to you and let you react. And that is that their supply and demand does not drive reinsurance pricing at all. It's got nothing to do with that. It'll also do with the last 5 years' experience. And so capital's decision to come. So supply is actually a consequence. So it's a symptom, not a cause, right? And so the supply emerges because people believe that that they understand what's going on. And so it's a reflection on uncertainty. So I did an interview with Paul Ingrey a little while ago, and he's got a very simple kind of way of thinking about the reinsurance market, which is all based on fear. If people are scared, prices are going up. If they're not scared, prices are going down. That theory for the operation of the market does not include supply, right? So supply is attracted to an environment of certainty, or maybe uncertainty, I suppose, depending on which kind of supply we're talking about here. I'll put it differently. I think that capital is attracted to environments of certainty, and uncertainty capital leaves, and so you need different capital providers to turn up. I'm not necessarily advocating for like a pure version of that, but I'm wondering what you think about it.
Well, I think if fear is the governing issue in this, I actually say fear probably governs supply. That's how I would
Right.
put it.
Yeah.
Right.
Yeah. Better said.
I would just think back to the situation where in 2005. Well, actually, when I first started it in the putting together an insurance business or reinsurance that was cat driven, I had a lot of conversations with the senior people at the firm saying, look, if you're not comfortable putting money back to work when Miami looks like Venice, don't do this.
Right.
Don't even put the first dollar in, because it's going to happen. I mean, it's not because you or I or anybody else here control that outcome. It's just that's the nature of things, and you have to be prepared to be big after an event.
Can capital providers credibly commit to that, do you think? So you can go to somebody who's running a fund or something like that, say, you got to be committed, and that person, maybe in that person's committee that sits behind them is like, yeah, we're in for that. Is there another layer of evaluation that occurs, or at what point does it occur that they could actually get the rug pulled out from underneath
Absolutely,
them?
We all could, right?
Yeah.
There's no contractual obligation to follow through on that, right? At the end of the day, I'm trying to give somebody my best advice on how you actually approach a marketplace. And if they decide they want to do something different, the results will be different. It's it's a question of who controls the allocation of the capital. So we actually, you think about, we had the financial crisis in 2007, 8, and 9. Rates did not really move that much. Right, it kept going down over that time frame, so probably didn't make a whole lot of sense to put more and more capital in the cat markets unless you were already committed to it. But you think about what happened in 2005 and 6, there was a massive increase in rates. And so we massively increased our bets over that time frame. And whereas 2005 was a really rough year, as you would expect.
And 4 was as well. I mean, I remember 2004 was the biggest hurricane year on record.
Yeah.
Right? You had Charlie, Francis, Ivan, and Jean. And then the next year you had literally the biggest hurricane year
ever.
I mean, everybody could have even imagined. We went into the
Six
alpha,
Sigma
beta,
experience.
gamma.
Exactly.
Yeah, it was unbelievable. In January, more. I mean, it's incredible. I mean, and you think if you're a capital provider who's already in that business, and you're linearly extrapolating from 2004, 2005, you're like, oh my God, 2006, right? We're going to be starting making movies about this stuff. And you're like, I'm out.
Could be. But I mean, the same thing happens when people are betting on any kind of performance. Right? You have to actually, you're trying to peer into the future, right? And something about the future is very uncertain.
Yeah. I'm not sure what genius said that.
Exactly. It's like, all the predictions are wrong, especially the ones about the future.
Yeah.
Yogi Berra kind of poorly paraphrased. But just what do you think realistically is going to happen? And I mean, it would have been a disaster to put more capital down in 2006 and have that make, if that had turned out to be worse than 2005, or even a quarter of 2005, it would have been really rough. But sometimes persistence, if you have a fundamental view about what should be happening in the marketplace, in a natural market like that, you're gonna, you got to stick with it, and in order to make money.
Is that strategic thinking? Let's say about capital allocation. What I would imagine is that's identical no matter what kind of institution you're in. So if you're in an investment bank, if you're in an equity hedge fund, if you're in kind of a proprietary trading kind of hedge fund, which is how we might characterize the insurance-linked securities business you're running, reinsurance, insurance will preview your future part of your career here, and say you did run those companies too. Is that the same? Do they all look at this kind of in basically the same way?
Well, I guess the question, I'd probably turn the problem around. I mean, and say it's not just limited to capital. Right, you think about your resources. You're just doing resource allocation. Period. Whether it's time, people, attention, money. A lot of what you have to do when you're a manager, or running anything really, is you're allocating. And what do you think the most probable outcome is going to, the most beneficial use of those resources? And so, I guess there is a universality across those things. It depends what if you're running a fund, your biggest resource that you have besides time, which is always your biggest resource,
right?
Capital is a huge one, right? But there's no different if you're running a reinsurance broker, right? How are you going to spend your time and whatever precious resources you have, that you could otherwise not spend and increase your margins, right? I mean, you have the same the same questions.
So. How about risk management, capital allocation, those kinds of functions, those kinds of call it domains of expertise. Any thoughts on contrasting that between the capital markets and then the insurance reinsurance world?
It's all basically the same principles.
Yeah.
Measure. Keep it simple and measure. It's probably. I'm sure there are folks that are doing very sophisticated jobs. When we were putting together our own tools, it was really simple stuff. What's your PMLs? What are your limits? Things like that. I think
what's the worst that can happen?
What's the worst that could happen? I think one of the big differences in the insurance and reinsurance world versus the capital markets is, when you're writing an insurance, the sum of the limits that you write relative to your capital.
Yeah.
You do
a
not
definition of leverage.
Right. You do not want to be publishing that, right? Because it's a really scary number for a lot of folks who are not used to seeing that environment.
Yep.
But then if you turn that around and equate it to, you own the equity slug of a CDO, it's not dramatically different, right? It's just a question of, what capital do you have ahead of you? So we had a lot of conversations around, what is your limit? And that's why reinsurance, I think, works pretty well for a fund because, they want to know what the absolute downside is, right? And I do too. I mean, everybody should. And, theoretically with an insurance company, your absolute downside is whatever capital you have provided, but your leverage is quite dramatic.
Yeah.
And it's actually pretty dramatic in reinsurers as well, but in insurance is just off the charts.
Yeah, it's incredible. I mean, if you take, I did an exercise once where you thought about what are the limits exposed on, say, I don't know, GL United States. I mean, we don't even use the kind of magnitudes, like it's whatever's after quadrillion. It's just
right.
Like
these are really big numbers.
Yeah. I mean, incredibly.
It's like astrophysical.
Yeah, right. Yeah. You start to use scientific notation to define the leverage ratio of the insurance industry. So HBK, the ending of that was financial crisis related stuff, right? Not your fault. You just in right place, right time, wrong place, wrong time, I guess.
Yeah, and I think we had a large investment in a company called Glacier at the time, and the CEO wanted to go one way and the board wanted to go another. And I jokingly said I was in the bathroom when they selected the new CEO because I came out and they said, "Guess what you get to do?" Never did I mention this opportunities in Switzerland?
Was that another Will Rose driven?
Yeah, it was actually Will Rose and a couple other guys I worked with a lot from family office, Alex Friedland and Sergeant Vukovic and Ravi Yadav. Kind of encouraged me to go do all that because they were all on the board together. And at that point in time, actually, Bill Riker was consulting and helping out in the background. And so I thought it was a great opportunity because, first of all, built on a lot of things that I was pretty comfortable with, which is ultimately we knew we needed to get liquidity for the investors because that's where the puck was going. So I knew I could do that. I mean, I've bought and sold businesses before, so it kind of built on my investment banking background, and was familiar enough with the subject matter of running, being involved in reinsurance because I've been investing on this board and different activities. But what was new was actually running a company,
right?
And doing that in Switzerland.
So you're still living in Dallas, and they asked you to go run this company in Switzerland.
Yes.
Wow.
So it was pretty rough. Would not recommend that as a lifestyle choice.
Yeah, commuting to Switzerland
yes.
from Texas. I can imagine.
And
so what are the specifics? So what did you? It was like 2 weeks on, 1 week off kind of thing?
It's been a couple weeks over there and then back.
Right.
Back for a week.
Your family, how old were your kids at the time?
My son was 12 and my daughter was 10.
Right.
Not great.
Yeah.
We did that for a couple of years. It was not a fun time. It's probably a large reason why, previewing where we're going to go next, we relocated to Rhode Island at some point. But it's, it was something that, from a career standpoint, I've kind of followed my nose.
Yeah.
And ultimately, I think actually I've enjoyed in running companies more than anything else that I've ever done. Mm-hmm. And, and in Switzerland, the challenge was, I was brought there. We had to figure out what we had and what we could do with it. And there were two pieces of it. There was an insurance business and a reinsurance piece. And the question was just finding the right homes for all the pieces. Mm-hmm. And we had an interesting problem because, I evaluated that as being, we had a really good company. Like the people were good, the systems, the processes. It actually was generating good business and decent margins and good processes and so on. But the opportunity set for a small reinsurer was small.
Yeah.
And the tide was going against us. So the business need was not really there. The insurance business actually was quite a good one, and that is one we ended up selling to Taurus, which launched their European specialty business. And they did a lot of great things with it, which is awesome. They had a lot more risk appetite than we did, and so it was a perfect trade. They could do more with it than what we were prepared to do. We didn't write a lot of casualty, for instance. It's just not something we had a lot of background in, so we didn't do it. They did. They liked it. It's a big part of the European market. Away they went. And so I was left with the reinsurance business, which I needed to try to sell. And we made a tough decision, which is we actually put it into a self-managed runoff. Because, at that point in time, we couldn't find someone who wanted to buy effectively a pile of cash.
Yeah.
We had like $50 million of premium and $300 or $400 million worth of cash. And so, we were one of the few companies that I'm aware of that actually was completely super solvent when we decided to stop writing business. And but it was the right call. We just weren't making the margins and the returns that were required for our capital. So then we had to go about trying to sell that. But in order to create a competitive process, we put together a self-managed runoff. And I do remember a time I had to get in front of all the employees and say, we're all going to be going.
Yeah.
And maybe because it's in Switzerland, I gave them a schedule, so it worked. And I was not the last guy on that list, right? There were people, I was, towards the below the halfway through, but I was still not the last guy. There were other people who were going to turn the lights out behind me.
Yeah.
And, but I think that whole process of just being clear and transparent, even through rough times, was a really big learning lesson for me because I had lots of tough conversations. I had to let executives go who'd been there, and that's never easy. Just tough set of questions trying to do turnarounds.
So if there's a difference between kind of almost the up the ivory tower, allocating capital, making kind of investment decisions, doing deals, and now you're dealing with people, running a company.
Mm-hmm.
How, when you turn up, can you maybe reflect a little bit on the learning process of what that's like? I mean, you show up and you're not sure what you're going to do yet, and they're probably all terrified. They're all going to get fired. Who's this guy? This guy from Texas. He's just commuting from Dallas. This can't last. He's just going to fire us all. That must be what's going through their minds. I don't know how much of that was expressed, and how would you deal with that?
Well, I was a little bit fortunate in this circumstance because I'd been around the company for 6 years.
Okay.
And so I knew all the employees practically.
See.
I didn't know the depth, but I certainly knew the senior management team.
Yeah.
And I think people knew that I was, I wasn't coming in just to. I was trying to figure out what to do, right? And it was pretty clear after a while what the answer was. The board may have been there before me, but I needed to kind of get there myself.
Right.
And fortunately, they generously gave me the time to get there myself and actually move the team along.
Mm-hmm.
I knew it was a little bit of a training wheels exercise for me on that. I mean, I had that background. It wasn't like I was coming completely cold.
Yeah.
That very different than Narragansett,
yeah.
Where I was a very different circumstance. But it's, a lot of it's just being transparent, and trying to be as clear as you can and saying, good, bad, or indifferent.
Did they ask you? Did they say, what are we going to do, Todd?
Mm-hmm.
And then what did you say before you had decided? You're like, I'm not sure yet. Here's the plan.
Here's the plan. Here's how I'm going to go about trying to solve this problem.
Yeah.
And the range of outcomes could be everything from we're going to need to have some kind of change of control at some point.
Yeah.
And if we can find someone who can buy us and continue to operate what we are as a business, then that will be a outcome we'd like to consider.
Was there a fair amount of attrition? People leave?
Not really. Not
Why
really.
Not? Shouldn't they have left? If they can, I got to get out of this thing. What do you think?
No, we're making money,
yeah.
right? I mean, it's still a profitable, healthy business, and it's part of what you have to, I think people get, you talked about fear causing. We talked about fear causing changes in supply of capital. I think that actually has a big impact on people's behavior as well.
Yeah.
And and I think to the extent that you can try to clarify the uncertainty of the future, even if I didn't know what the answer was going to be, but we said, here's the range of outcomes. Here's how we're going to go about solving it, and it certainly begins to unfog what the future is.
Yep.
And that I don't know if that had some impact on it. We also don't forget you can actually also give people plenty of incentive by making sure it's worth their financial while to stick around too, right? That's also
if you're making money, you have that. You have the luxury.
You have the luxury of working on that question. Unfortunately, the board got that one quickly, and that allowed me to to make it worth people's while. And So I think both things matter.
Do you remember the first time, this might be here or elsewhere in your career, that you had to let somebody go?
Mm-hmm.
What was that like? First time?
It's terrible, right? And Dale Hammond, who's on, who worked with off and on for over a decade, says, if it ever gets easy,
right,
quit.
Yeah.
Because you still have to sleep with yourself at night, or wake up in the morning and be able to be comfortable with that. But just because it's uncomfortable and painful emotionally doesn't mean you shouldn't necessarily do it. It may be the right business decision, and that's what your job is. And so a lot of life is holding contrasting ideas in your brain and still functioning.
Yeah.
Right. I think that's a good one.
Mm-hmm.
It can not be fun, but maybe actually be quite emotionally difficult. But again, I've always tried to have when I deal with that is that unless you've done something terribly wrong, I'm going to try to make sure you have your dignity and a good runway and whatever we can to make that work for somebody. If you've crossed the line, I have no problem letting the door hit you in the back of the head.
Yeah.
But it's I think if you approach it like that, it makes me feel like I can live with myself.
Yeah. I can think of situations that I'm familiar with where there's clearly a problem and somebody has to go, but nobody wants to pull the trigger because everybody's scared of the confrontation.
Mm-hmm.
Right?
Nobody likes that.
Yeah. Yeah, it's an awful feeling. It's almost like solving an awful problem with another awful solution. It's brutal.
Yeah, well, there's all these kind of aphorisms you use in management. One of them is to hire slow and fire fast.
Yeah, right.
And I think that's really meant more for onboarding people. Like if you've made a mistake, you don't think you're going to kind of work your way out of it.
Yeah.
I'm sure if you ask any manager or anybody who's trying to lead a business, that's a common problem is you hang on too long.
Yeah.
With folks. And I'm certainly been guilty of it. So.
Yeah, it's a difficult thing. It's a difficult thing because I think that and I know something I learned from you is you gotta care about the people, right? And you gotta build those relationships, and then to end one. In some ways, it's almost an admission of failure, right? That you weren't able to solve the problem or fix the issue or whatever, overcome some problem that was there. Which makes it, it's kind of layers another kind of bit of difficulty on the thing.
Well, if you think you're going to succeed at everything you do, you probably aren't challenging yourself enough.
Yeah,
right. So, you're going to make a call, whether it's a person or a business, adventure you're going after, and not all of them are going to work.
Mm-hmm.
Right. The question is why? Did you learn from it? I guess that seems to be more the relevant question. Yeah, and it's also, when I've had to let people go, it's also how you maintain the relationship.
Yep.
Right. And it's. Again, if you've treated them well and you give them a chance to have dignity when they leave and the right circumstances, there's no reason you can't have an ongoing relationship. It's just different.
Mm-hmm.
That's not unusual either. It is. I still have a lot of friends in Switzerland, and think about that. Where had to deconstruct the company we were all working on.
Yeah,
but
it was the right decision, and people. I guess the big lesson there is, it's. And we were talking about this before we started recording today, which was transparency and just being open and communicating with people is, it just makes it palatable. It makes it possible.
It's about the best way I can, the best way I can figure out how to, maintain a relationship.
Yeah, it's so simple. You have to learn it over and over again, and it's amazing.
Yeah.
Isn't it?
And we're always opportunity to be more quote transparent. There's no perfectly 100% transparent standard, but if your intention is driving that way, I think that's probably, at least in my experience, a reasonable start.
So how long did it last in Switzerland? How long were you doing that commute altogether?
About 2 years.
Right.
And
boy, that's a long time.
The probably the party that benefited the most, and when I stopped doing it, American Airlines called me and said, "Is everything okay?" I said, "For me, it is.
Yeah.
Maybe not for y'all."
Yeah. Wow. How long was that flight? Was that how long before you walk out of the house in Dallas and you I don't know when you got in Zug, or I guess as it was.
Pfaffikon. Door to door, it was about 24 hours.
Right.
Because we'd fly from Dallas to Frankfurt and then take a small jumper plane to Zurich and then drive, and it was a long time.
Yeah. So 2 years of that, and then you're done. Last time, what was it like coming home after that last flight? You know, what did you do? Went to bed.
Yeah, I slept a lot. Yeah, actually, it was an interesting time because that was the first time in my career when I really decided to take time off.
Yep.
And I've talked to a number of my buddies who are in the executive search business, and they say, midterm executives, that take some time off, it's inevitably a good thing.
Yeah.
Right. Because, I've been busting chops for 20 odd years doing investment banking or fund management and, making executive platinum by April kind of thing for, 20 years. And it's a good idea to maybe reassess at some point. And I was fortunate to be able to do so. So I took about a year off.
A year.
And played around with projects and, really started getting serious. And I'm use air quotes around that, but about 6 to 9 months into that, I started actually looking out. For the first 6 months, I didn't do anything.
Signals are being recharged.
Yeah,
that's how long it took.
Exactly. I was waiting for my, to be led that way.
Yeah.
And
What'd you do for the 6 months? What'd you do? You drive your kids to school or what? I mean, what do you do?
Yeah, the first part of it was actually quite entertaining because I was the one historically in my wife and my relationship, on the road working the long hours, and she was running a charity auction for our daughter's school at Hockaday in Dallas, and it was a huge project. And so she was working the 80 hours a week, and I was driving the kids to school.
Cool.
Going to coffee with the moms and yoga in the morning. It was all like, I'm living this dream. I gotta get some more of this.
Yeah, what a change.
It was a really fun change of pace. Unfortunately, it didn't last, but it was a great time. And it's
At that point, your kids are 14 and 11 or 12.
Yeah, they're basically in middle school.
Yep.
And so driving to school, pick them up, do all that fun stuff.
Reconnect.
Reconnect.
Yeah.
Exactly right.
Yeah.
And it's a challenge when your parent travels that much.
Yeah.
But fortunately, we've got great relationships, and and we wanted to be together, and that's why we decided to move later. So that was a big part of it.
So next, so you're evaluating opportunities, and then tell me about Narragansett. How did that come up? What was the phone call?
Whenever Alex Friedland calls me, I usually end up moving. So I've stopped taking his calls.
Yeah.
He's a great guy, absolutely, really, really dear friend. And he called me up. He and Ravi were thinking about what they wanted to do next, and had this opportunity in Narragansett Bay Insurance Company in Pawtucket, Rhode Island, selling coastal homeowners insurance. And it was a really good business proposition that needed a little bit of discipline and focus in order to let that opportunity shine. And I'd looked at enough business plans to know that, you're looking for something that has an edge.
Yeah.
Right. And it's so difficult to find one in financial services. I mean, it always is difficult, and I think it's gotten harder.
How many did you look at, you think, through that period? Like one a week, or you email people to say, hey, Todd, check this out?
If I had to go back and look at it, probably inventoried about 10.
Yeah, okay.
And some of them were my own, too. So, come up with my own
ideas
and see if I can actually, and I'm testing them, right?
Yep.
Do I think this actually works or not?
Yep.
And, and it's always a challenge to kind of be objective because, you can fall in love with your ideas and think, oh, we'll do it differently, right? We'll be better. Well, why, right? And, but the proposition at Narragansett made a whole lot of sense to me because, basic fundamental supply and demand. And if people are not selling product where people are living, you should be able to make a good living.
This is kind of through late 2011, early 2012. You're looking at this.
That's right. Early 2012, and Narragansett was been operating in its current form since about 2008, and so had a couple of years of really beginning to sell policies and growing like a weed, but needed to go from growth to profitable growth, and so they wanted someone to come in and do that. I started looking at it in the beginning of 12 and got hired on in May, and pretty quickly realized, a lot of things needed to change because, we were selling, but maybe a little too cheaply.
And so were you expecting to walk into a situation kind of like Glacier?
No, I think the opposite problem.
Right.
The Glacier,
and that was not a surprise to you, though.
No, not a surprise at all. I mean, I've done a lot of evaluation. I think I tried to, I sent them like a 100+ line due diligence list.
Interesting. Who would you send that to?
I sent it to the board guys who were trying to hire me.
Right.
And, they came back and kind of freaking out. And I said, look, if you can answer all this stuff, that would be impressive.
Yeah.
But what you can't answer tells me what's really going on.
Yep.
Right? So it was as much an evaluation of what was there and what wasn't there as a way to kind of smoke out what I was really dealing with.
Yep.
But in essence, what we had is the opposite problem we had at Glacier, which Glacier I thought was a really reasonably good company, like the team and all that stuff that was there. The business was ebbing away from us. Mm-hmm. And what we had at Narragansett was the opposite issue. The business there was demand for this product. We just weren't organized and mature enough yet. And, I described, maybe because I was just dealing with my kids going through their own puberty, I described this as being kind of at the early stage of an awkward teenager years,
yep.
right? And, you think about your kid at that point, it just kind of drives you nuts from time to time, right?
Yep.
You love and adore them, but you're like, wow, is that really what you decided
I got
to do?
5 years before I hit that, Todd.
You'll be there.
Yeah, I know.
You'll be reflecting on this, hopefully.
Yeah.
And hopefully others as well. But it's, so yeah, I walked in. I kind of knew that this was a bit of a social challenge. In fact, the financial issues were really clear to me. But it was as much about cultural, behavioral change as anything else, as much as anything I've ever dealt with.
Yeah.
Whereas I didn't have to deal with that at Glacier. I mean, there's a much more professionalism, maturity, and things of that nature. Mm-hmm. And so we just stick to the basics, and just really simple stuff. I mean, people would go to meetings and we'd have an agenda, and who, what, by when follow up, and you start doing that, and you build on it a little bit by little bit, and the next thing you know, you're starting to show success. And that just kind of builds on itself.
So where did you learn how to do that? Where did you learn how to identify and fix management problems? Glacier, somewhere else, somebody teach you, somebody put you on to something?
It's probably the accumulation of everything I've done over my lifetime. I told my mom the other day, I said, a lot of what I do at Narragansett is what you taught me is like, when I was in school. Make a list, do the first thing on the list until it's done, do the next thing on the list. Mm-hmm. It's just not complicated. But there were a lot of tools you can use that that I think I picked up on through history. I mean, there's things like manager tools and the kind of some of the things we've talked about in the past.
Yeah,
which,
sure.
Kind of the if you get the basics correct, one-on-ones, delegation, coaching, and
feedback. So that's we'll put a plug in for manager tools. Yeah. This is a resource that Todd put me on to when I first started taking a management role, and this is to the audience. Download the Manager Tools app. Listen to the podcast.
Yeah, it's one of the more impressive podcasts I've ever heard because it's effective and practical.
Yeah, it's amazing.
And so those guys, the two Marks, do a great job on that.
Yeah.
So very, 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 very big fan. And I started doing the basics there. Yeah. That was always helpful because, and we've talked a little bit about this, that so much of it's based on relationships. And relationships start with lots of conversations. And if you have regular conversations, you can build up that social capital, which allows you to have tougher conversations.
Yep.
And because business isn't always roses.
Yep.
You have to have some tough conversations from time to time. So you better have more likely to be successful the more you know each other.
So this is, and for those following along at home, this is Todd running a homeowners coastal business in the Northeast in early 2012. What happened at the end of 2012?
You would think actually my history is really good because we started Glacier. We started operating Glacier in 2005.
Yeah.
So its first year of operation was Katrina Rita Wilma.
Yeah.
So now I'm showing up at my homeowners opportunity, and in the summer of 12, I tell people I was still trying to figure out where the coffee machine was, and this thing called Superstorm Sandy hit 4 states, the 4 we operate in, and basically devastated the company, right? And but as I said to the team that was there at the time, this is what we're built for, and in so many ways, I say to anybody who would want to listen afterwards, it's gonna make the company because it tested the business proposition, and the company did a really good job operationally. And from an underwriting standpoint, we beat people's expectations. We took a high-risk portfolio, and we actually, through a combination of good decisions and inspections and whatnot, in order to underwrite, and it performed in line or a little bit better than the models.
So what happens inside of a coastal insurance company, kind of just before, during, and just after a storm? What's that like? What is the operational kind of experience?
Well, the way Narragansett worked is the entire management team goes on first call, and so everybody there is going to be taking claims to start with because you just get a flood and
20,000 claims, was it, something like
yeah.
that? Yeah,
And you're talking, how do you manage over 100,000 phone calls?
100,000 phone calls.
Right.
What's the staff count?
We have about at that point in time we had about 90 people.
Right.
And so everybody's taking claims. Even our chairman Nick Steffi, who was the gentleman who got the whole thing started, he was in the next office. When I hear him talking to people, is we're all doing it, and that's just kind of how you ramp up.
Yep.
And then you backfill with claims folks in order to manage that. But it's a lot of operational responsibility, and we were fortunate in a sense during that time frame. One of our directors, Dale Hammond, helped out and kind of was the Sandy executive, if you will, because that became a business for us, is to make sure all the trains are running on time, people getting satisfied, all the things that are going to break down, because inevitably your plan will get challenged and your systems will get challenged, and you got to solve those problems. He helped run that for it while I was working on the rest of the business, and so it was very helpful to manage that. But it's, I think if you've ever been in a claims process before, claims managers, I have an enormous amount of respect for them.
I don't know anything about that.
The adjusting process. Well, you're one part psychologist.
Interesting.
And one part technical specialist, right? Because think about what you're dealing with in a catastrophic event, or any catastrophic, whether it's a hurricane or a fire or something like that. You're talking to somebody who is emotionally distraught, and you got to help them through it. And you got to do that without becoming emotional yourself or burned out. And if you're trained,
you're doing, I don't know how long does a call take, and
it varies.
Yeah.
But I mean, you could be doing 10, 15, 20 a day if you're not built for that, you're not trained on it. It can be tough. And so we had a little bit of burnout questions for folks, right? But we anticipated that, and but I think that's part of the realization and I think it's important that we realize this is why we're here. Right, we're here to solve, to help responsible homeowners, get back on their feet, and so even as senior executives, it's important to have that feedback directly, and very rarely do you get it that cleanly
from your customers.
And
do you remember your first call?
Yeah.
How's that? What was it? Can you tell the story about it? Is it...
Well, it was a.
How does the phone work? Are you sitting down? You're like, okay. Which
well, actually, at this point in time, we routed everything to their desk. But
okay,
it was a lady who called and said, "Look, I've got I've got water coming into my garage."
When is this? Is this while the storm's still happening, or
right after? Right.
Okay.
I mean, like the storm lasts for a couple of days. I mean,
it hit on a Sunday or a Monday or something.
Yeah, exactly. Right? I think it was on Sunday night. We started getting calls.
Right.
So immediately. And she was it was a relatively low keyed call, but we just gave her, in her circumstance, we were going to be dealing with flooding issues, which was a really big question around Sandy. We can go into that if you want, but which is as everybody knows, homeowners is not covered by flood. Flood is not covered by homeowners, and so in her circumstance, it was like.
This isn't going to work.
This is going to be we'll give you the flood denial. So
but did you give her a flood denial? Did you say, how'd you communicate that to her? How do you say that? That sounds like a flood to me.
Yeah, I think the seaweed in your garage probably indicates flood.
Yeah.
And we made flood denials relatively straightforward to get. I mean, we want it, and we had to, right? Because we want people to start the process with the NFIP as soon as they
where they are going to get covered.
Where they are going to get covered.
So what, do you give them the phone number, or do you say, this is not covered, ma'am?
Yeah, exactly. You try to help them through the process as much as you can.
How'd she take it? She was like, oh, okay, I didn't realize that. Or she was like yelling at you.
She was pretty cool about it. Most people are.
Yeah.
Some people don't. They're emotionally upset, and in that circumstance, they don't always make rational decisions, right? And they need somebody they want to fix their problem, right? And so that's
they thought it was going to be you,
right? And that
expectation's been violated,
right? Because it was never part of the expectation.
Yeah.
But that was their expectation. It doesn't mean it was. You're talking about human beings, right?
Sure.
So. That was, that was a pretty rough time. But you also hear stories like, I love one of my favorite ones was this guy who called up and he goes, the guy in Jersey, I think, and he goes, there's a boat in my living room. And he
That's
goes,
the problem.
it's not my boat. and he goes, but don't. And this is back when good chunks of the Jersey Shore didn't have power. I mean, all the civil services had fallen, gone down because all the, they were all flooded. And he goes, you just want to put the claim in, but don't worry about me. I know there are people worse off, because this boat, there's a full generator and the cooler's full of beer. And so I'll just hang out in the boat. I thought, man, human beings are going to survive.
Yeah.
And, eventually we got to, you have to triage, right? Because you can't deal with everything at once.
So the water picked up that boat and just smashed it into his house. Is that
Oh,
what
yeah.
happened?
It happens if you were, depending on where you were in the Jersey Shore, that happened a lot.
Yeah.
Especially low. I mean, there was an enormous amount of storm surge. 20 plus feet. I mean, Manhattan got
20 feet.
Yeah.
Wow.
I mean, the water was coming in through Manhattan.
Yeah.
So you have to. There's a lot of water, and that's very devastating.
Right. And as it kind of recedes, that is the claims activity, what are you left with? Lessons, thinking about it, and how long did it take for it to kind of die down?
We paid our last claim this year.
Oh wow, okay. Right, 6 years later.
Yeah. We broke out the champagne for that one, but it's 90+% of them are done within 90 days.
Right.
And within 6 months. Maybe 75% of them are done within 90 days. And the stragglers are always something. There's a problem, and disagreement over water, wind determination, or other issues, and some ambiguity of coverage. But I think that's pretty common. Our numbers, the numbers didn't move after about 6 months. Realistically, they came down over that time frame very slightly, and we did end up with a lot less litigated claims than we anticipated. Not that largely because we were trying to extrapolate from from Katrina, but the Northeast doesn't seem to have the same kind of litigation culture, or maybe there just wasn't as much to talk about because the company performed better. I don't know.
Yeah.
Different issues.
How about the regulatory environment? Because there was a publicity kind of issue for you, right? Where the regulator came out. I forget. I think it was in New York. Maybe you can talk a little bit about that. How did that come about? How'd you find that? That'd been a new one for you.
That was a totally new environment for me.
Yeah.
I've always had really good relationships with regulators and agencies because I've tried to, I've been fortunate in circumstances. Most of the people I've dealt with actually I thought were pretty rational and realize that we're trying to do their job. We're trying to do our job, and they're trying to do their job. There are certain parts of no surprise to folks, but sometimes parts of regulatory groups will take a very strong consumer advocacy approach, which may or may not be done for their own reasons, which they feel are justified. We certainly find a very aggressive version of that in New York, and very frustrating for us, where we had some late claims, and a lot of complaints. I think we had like 300 complaints out of 10,000 claims. Over half of those were because they were mad because we didn't cover flood.
Right.
And so, which, we sort of pointed that little factoid out, but it didn't seem to matter in the conversations. But, sometimes I think the political environment is that people need to make hay out of it.
Yep.
And that was, at least my judgment, what happened. But, it is what it is.
Yeah. So let's talk about the flood part of this. So flood's not included in a homeowner's insurance policy. The NFIP covers flood. It's kind of a hot topic these days in the insurance world where people are trying to solve that problem. The NFIP is perhaps changing. We're going to see. How much do you think the consumer appreciates what's going on?
I don't think very much at all.
Yeah.
I just, most people don't spend a lot of time thinking about their homeowner's insurance for good reasons. There's a lot of other things to do in life.
Yep.
And I do think the way that we handle flood is just kind of messy, and certainly for anytime you kind of get the politics involved and the whole elements around that, it becomes a non-economic issue, right? It's a question of, I want to live where I want to live, and you got to make sure I'm able to live there, and never mind the risk factors involved. So, the NFIP is, serves a purpose, but certainly doesn't do anything. We actually thought long and hard about whether we wanted to sell the NFIP policies or not. And I said, I'm not convinced that's something I really want to get associated with.
Why not?
Well, I think it disappoints people more than it actually makes them feel good, right?
Because how so? What's disappointing about it?
Well, the limited coverage.
Right.
You don't cover contents. Sub-basements. At least I think the expectations that most people have around it is that there was a flood. Why isn't this covered?
Yeah.
And I think I hear more stories about disappointment than I hear about happiness after that, right? And it's not like we're going to make everybody happy, but I didn't want to create more circumstances where we have a product which is substandard relative to what I think I would want to sell, which is ideally something that it solves somebody's problem, and more directly a standard homeowners coverage. But it's not to say it's a horrible product. It's just something that I didn't think was going to. I think that we're trying to look for better ideas.
Yeah. Another thing I want to make sure we talk about is technology systems. And so you're at a homeowners company writing, I think that when you left Narragansett, 200,000 policies, some kind of neighborhood with 100 people, something like that. So that's some operational leverage. That comes from technology. How did you find your? Had you had a real big tangle with systems before that? Glacier, was that kind of, or was Narragansett really where?
Yeah, Narragansett's a whole nother.
Yeah.
That was more a varsity version of this question.
Yeah.
The systems issues. You're talking about thousands of customers at a reinsurer, whereas you're talking about hundreds of thousands, if not more, at an insurer. So systems and those kind of elements become much more critical. You've probably heard people in the military say when you go to war, the amateurs talk tactics and the pros talk logistics.
Yeah.
I think the analogy would be, and if you're talking about insurance, amateurs talk about accessing business and pros talk about systems.
Right.
I mean,
underwriting distribution, you're like, tell me what the pipes look like.
Exactly, because and highly underappreciated,
yeah.
right? But we need to get bullets and beans and oil to the right people at the right place in order to make sure that they can do their job. And the same thing about, how many times have you been in a conversation and saying, well, what's the data say, right? And you're about to blow your brains out because to get it is 100 man years of work, right? Which doesn't make a lot of sense, especially in this environment. So yeah, we had spent a lot of time working on systems. That's certainly going to be one of my big takeaways is how to do that issue better over time, because I think we did a decent job at Narragansett, and but so many resources and time are devoted to trying to get that issue correct. And when you get it right, it's a competitive advantage. And I think whether it's a policy administration system or your data warehousing, a lot of it, that's probably an underappreciated requirement to get those things right.
And so how do you do it better? How do you do it worse, and how do you do it better?
Well, if there were two things I would walk away from is, everybody thinks it always starts with business requirements. What's the business problem you're trying to solve? Don't fall in love with the technology as so much as you're trying to solve the business problem. And really be disciplined about that question first. And what's the purpose of building the system? Not to have some whiz-bang technology. In fact, I'd rather have one that's a generation or two behind if it was solve my business problem cleanly. Right? And so that defining those business requirements and being disciplined about that early, I think, is really critical. And the second point is try to find something that's kind of off the shelf. If you try to configure things too much, try to customize things too much, you're going to pay for it. Especially when you're talking the size of companies, that I've been involved with.
Yep.
If you're AIG, they have more people in their help desk than we had in our entire company, probably. So you can be more customized. But the reality is, a lot of that stuff is you just got to rely on the tools that you can work with.
And so maybe it's possible to talk about a system failure. Is there an example that comes to mind where I made this mistake, and then this was the outcome, and now I would make a different decision later on? You don't know how specific you want to get, but
yeah. Well, I think I think as an executive, we made mistakes around not being firm enough on staying in that customization configuration zone.
Right.
Right.
What's the temptation to leave it? Why would you? Why do you not? Because everybody probably realizes that in some level, right?
Yeah, I think what seems to be the interaction that I saw what was the interaction I saw that I would push back on if I saw it again is that we've always done a business flow this way. We've always done it this way, and I want the system to mirror our business flow.
Right.
Whereas in some circumstances, certain circumstances I saw, there would with a modification of business flow, which would have made no material difference. You don't have to redo everything, right? And part of that is a system implementation is as much of a cultural issue as anything else. And when I walked in to the company, we were in the process of transitioning from one system to another, and it was not going well. And I think I was probably more sensitive to making sure the business users were happy, and then the technology people were making them happy, right? And so when we went to the second question around technology, I think that lingered through, whereas I probably should have pushed back a lot harder on the business folks in order to say, look, the technology can't do that and everything else, or it's going to be too expensive to create that way. But it's all about balancing, right? And I think that balancing act, there's a lot of lessons to learn. But again, you don't learn these things until you actually make the mistakes.
Yeah.
And fortunately, it didn't. It slowed us down.
Yeah.
It probably didn't stop us, and it just consumed a lot of resources and made it strategically difficult to do some other things. But choices.
I remember this reminds me of high school football. So I remember high school football team. My coach was he was all right. Our team wasn't that good, but he said one of the things that he said, which was a good thing. He said you try and design the playbook around the resource, the team you have, as opposed to take the team and force them onto some plays that they can't execute. Right? You have limited talent, and I think that what's interesting about this is, just pausing for a second and saying sometimes truths are universal and sometimes they're not. In this case, it's not, because in this case, you have a system that you actually do want to try and redesign the team a little bit to suit the system, because the cost of changing the system, swapping a play out in a football playbook is cheap, right?
Right.
Changing a system is not.
Right.
And maybe if there's a weakness amongst insurance executives or any executives, it's that they don't understand the costs of system changes and system modifications, and so they underestimate them.
Yeah, well, I think that's probably universally the case.
Yeah.
Right? It's very difficult to. I mean, I certainly had an appreciation if you change a field name, right, and the downstream consequences of what that means all the way through, not only your data warehouse, but how that might impact your financials and your GL and all. I mean, just those simple things actually can have consequences. And you think, well, we'll change the name of the field, right? Well, it's not that simple, right? I mean, it can be. You can try to get it to a routinized point, but it takes organizational maturity to have that. You have to have the right talent and time and experience and checklists and all the things that that kind of make it go that way. But a lot of that, what you're describing is, a situation that a metaphor I use a lot at Narragansett is that I'm trying to get this company to 4-minute miles. We're not there yet, and screaming at them is not going to get them there, right? You have to start meet them where they are, and if they're running 12-minute miles, that's great. They're 12-minute miles. Let's get them to 11.
Yeah.
Then we'll get them to 10.
Yeah.
And then we'll get them to 9.
You got to get to 10 before you get to 4.
Exactly.
Yeah.
There's a lot of room in there. You got to kind of incrementally grow,
Yeah.
and that doesn't happen fast.
Yeah.
And a lot of this stuff that you do in business, certainly my feeling is, continue your football metaphor. You might remember a guy named Woody Hayes, who was the Ohio State football coach, legendary. Alpha. Grab you by the face mask and scream at you to motivate you.
Yeah.
I love some of his quotes. Never pass because 3 things can happen and 2 of them are bad. Very insightful man there.
Yeah.
But he used to say his offense was 3 yards in a cloud of dust.
Right.
And I used to say a lot of what we do is that. And in fact, one of my board members coined the phrase, strategy execution is just strategy, and that's a lot of what we did. It's just execute at Narragansett, and that's not trivial to do day in and day out, because it's just discipline and focus, and that's not always sexy, right? It's not strategic, But at the end of the day, on each strategy, you have to have a good business proposition, but you have to execute, because that's what you can take home.
Another phrase I heard recently, which I love, is culture eats strategy for breakfast. That's cool, right?
It is another one. Yep.
So let's talk a little bit about...
and that's one of the things, actually, at Narragansett. We just had our closing dinner for the sale. And, I said this to the folks, and I think it's really true, is that was a wonderful opportunity where I thought we caught lightning as a team. and we performed.
What do you mean by that? So do go into that. That's exactly where I was going to go next.
Anticipated this. Well, hopefully, I've certainly had the wonderful opportunity, and hopefully others as well, where you perform better as a group than you do individually, right? And you were able to accomplish something as a group that you probably wasn't available to you individually. And, that's a wonderful experience. In fact, probably one of the most satisfying things I've been involved with. I was fortunate as a kid to play soccer at a reasonably competitive level, and I was with a group of guys who were together for 6 years. And we got to the national championships and, very competitive at different levels. And that was one of those experiences, right? We were just somebody that came together. And, certainly this last round with Narragansett we did as well. And, why? I don't know. Combination of culture, focus, discipline, positive results, feeding on positive results. I mean, you get feedback and you want to do more of it and that kind of thing. So that's kind of what I mean by it.
Yeah. So the team cohesive.
Mm-hmm.
Everybody respects each other, likes each other, gets on with it.
Enough to get the job done, right?
Yep.
Which is the
or more than that,
yeah,
probably. Right?
Yeah, more than that.
Do the job really well.
Yeah.
Yeah, which is harder to do. And so ultimately, so Narragansett was sold late last year, 5.5 years with the company or so. That's about right for you. Satisfying?
Absolutely.
Yeah.
Deeply satisfying. I mean, not only the financial result we're able to achieve for our investors, which of course, that's
the
why,
point. Yeah.
That's why you get the job.
Yeah.
But but also this element of just catching lightning, because we were able to take an organization and a team, and we all did well together, and that was very satisfying. It's hard to create.
Yeah.
But certainly something I'll be looking for in my next opportunity.
Yeah. And so what is next? What are you doing now? So you're back in the 6-month recovery period. That's right.
Yeah, exactly. I describe it as porpoising.
Yeah.
I got to go underwater when I go into the jobs, and then I got to come out of the water and mess around for a little bit.
Yeah.
Right now I'm just porpoising, so I'm just chilling and trying to figure out what the next one is. Probably we are relocating from Rhode Island back to Texas.
Because you moved your family to Rhode Island.
Mm-hmm. Yeah.
By this point, your kids were through end of high school, I guess.
Yeah, they were in high school, so moving to high schoolers was probably the second most effective way to really anger them.
Yeah.
The first one would be to take their car away.
Yeah.
Which I did not attempt to do. But my daughter, who's generally a very even-keeled kid, and the only time she really stomped her foot was the fact that driving age in Rhode Island is a year higher than it is in Texas.
Oh.
And she was like not particularly happy about that, but she, time was on her side.
Yeah.
So yeah, we're heading back to Texas, and a lot of family stuff going on there. So we're going to get back to that community and figure out what the next opportunity is.
So running out of time here, what I'd like to close on actually is this idea of family, because one of the things that I've always really appreciated about you is, on paper, you list the things you've done. It's all really cool stuff. You've achieved things, and at the same time, I've always felt like you've had a real grounding and kind of a value system that resonated with me, and something I hadn't really seen before I met you. And we met kind of in 2004, I think, or 5.
Back when you were known as Disco Dave?
Back when I was Disco Dave. And back when you were trying to figure out how to make money in reinsurance. Most of us have figured it out, I guess, although my dancing's not any better. I think, and wondering if you could reflect a bit on kind of like how does a family life look and feel, and how do you evaluate the priorities of family against ambition and against work satisfaction and those kinds of things. And
I thought you were going to give me a softball.
Yeah. I think we've been warmed up now. Time to hit you with a big one.
Oi. Look,
that's hard, right? I mean, it's so hard. It's so hard.
Yeah. Say something flip. I mean, a lot of my buddies, we all said our 30s just sucked.
Right.
Right? You're starting to have family. You're starting to grow your career.
Yeah.
You feel like there's just not enough of you to spread around.
God, Todd, that's how I feel.
Yeah. It's really rough. And it does get better. Certainly, past 40s now or early 50s, it's, dramatically, we're now empty nesters. So I've been very fortunate, of course, you start 70% plus of your happiness is who you marry and getting that one right. And I've been very fortunate that way. I met my wife in business school. I used to tell people jokingly, I went there to find some, really attractive CEO who's going to take care of me the rest of my life. I got 1 out of 2. I'm still working, but I got the other. So, I think, I don't know, we talk a lot with the kids about, try to give them insights to what I do. Apropos of a question you asked me earlier, when I got to Narragansett, the question was, did you fire anybody today? And I was like, well, that's not what I do every day. In fact, I don't like to do it at all. But in fact, the opposite. And so, but they'd try to get them insights to what you do. And,
did they understand, do you think?
Some. Yeah, to some extent. I mean, one thing I've always tried to do when I'm in town is to always get home for dinner, right? And, family dinners are kind of one of those things. Fortunately, my career was flexible enough. I wasn't on a client service type job where I could do that, right?
Yeah.
So when I was in Dallas, and made it home for dinner all the time.
It's easy to work late, isn't it? There's lots to do.
Yeah, that doesn't mean I didn't actually do homework, right?
Sure. After dinner.
After dinner, exactly. Like the kids, they went to go do their homework, and I went and do mine. And fortunately, that's, it's just about trying to carve the time up. And I spend a lot of time on personal organization so that I can manage that. And because the information flow we all have to keep up with is monumental. But that's kind of how it worked. And so a lot of those conversations at dinner time, is how you kind of pass that along. It's a little bit trite, but I think there's a lot of truth to that simplicity.
Yeah. And one last maybe thought is, and we have spoken about this earlier today, is being successful is just about doing a lot of little things, isn't it?
Yeah. I guess. I mean, think about like the great tennis players, Roger Federer, Nadal, and Djokovic. I mean, they hit backhands and forehands just like you or me or anybody else, but they can do it when somebody's doing it. Yeah, they can do it 5 hours into a match when somebody's hitting the ball 130 miles an hour at them, right? Whereas I'm good when the tennis pro lobs it up for me, right? And it's, just you have the ability to do those basics, and you watch those guys, and you think, well, that's clearly what they're doing. And so just keep it simple and focus. Seems to be good things to keep your eyes on.
My guest today is Todd Hart. Todd, thank you very much.
Thank you, David.
It's a wrap.